Yes, we'll compare the answer. Yes, so first thing, you would have written provisions of 32 or 109 that you have to recognize something at its fair value. Now, the fair value of the financial instrument will be the present value of the future cash flows, because it is at an off market rate, and then you can subsequently measure it at amortized cost, FETP or FVOCI. Interest revenue will be calculated at the rate of effective interest. So, first you will explain the provisions. Now, 19 says that employee benefit expenses in exchange of service should be expensed on SLM basis. Now, they have given a staff loan and charged this 40,000 to P&L account, which is not correct, because they have not recognized any employee benefits only, and the instrument is not at a fair value. So, you have to measure at the rate of 10%. So, first and calculate the interest will be at the rate of 18%, at the rate of 10%. So, this is the first part of the question. You are going to explain like why you are doing certain calculations. Then the difference will be treated as an employee benefit expense as per 19, and you are going to debit it on, since employee is required to be in service, you will use SLM basis. Okay. Yes. Now, working note number 1, calculation of the fair value. Did you get this 8,54,712 fair value of the instrument? Because our first working will be calculation of the cash flows. I will multiply the discount factor 8,54,712. Did you get this? Yeah, but I told you you can take 3 factors. Then you would have discounted and you would have classified 1,45,000 into prepaid, and first year you would have charged to P&L account. After this 29,058 you would have charged to P&L account, 1/5 of 1,45,000, and you are already told why you are doing this, because it is in this 19 employee benefit expense. Now you would have prepared an amortization schedule, and you have said at the end of the year it is 700,183, because they expect you to prepare a balance sheet at the end of the year. And next year end your balance is 5,38,000. So there is one current and non-current classification we may have to do. So at the end of the year, what is your total balance of asset receivable? 7,183,183. Will you show under which head? Financial assets or non-financial assets? Financial assets. Or will you say other financial assets? No, it's a loan, no? You will classify separately loan to employee. Will you show under current financial assets or non-current financial assets? 2 portion. Can you tell me how much portion you would have shown under current financial assets and how much is shown under non-current financial assets? You just tell me the non-current first, because that's first thing we are going to write. Can you tell me what is my non-current portion and what is my current portion? See, total should come to 700,183, because you cannot show more than 700,183 in your balance sheet. Simple. 700,183 should be total of the both, because it cannot be other than this number. In your closing balance sheet, this number should be there. Correct? Followed? No. So, if I have to ask you what is my non-current portion in this 700,183, how much? Simple, 538,201, and the difference between these two is the current portion. This is what you need to present there. Deferred income, this is the same story we did there. What is due next year is the current thing after 2 more years, and total together is nothing but today's closing balance. Why can't I? 2,22,000, how did you get? No, don't get into that, because these are all the present values, present value of the future cash flows. Okay. So next, accounting entry. Did you pass this accounting entry, discount on staff loan to staff loan? But that means from where you will get the balance in the loan account. How did you get on earth 8,54,000? This should have been 10 lakh, no, as per you. If you don't pass the rectification entry, then how can you prepare an amortization schedule with 8,54,000? So 8,54,000 you are going to get because he has made a mistake there. So first you correct the mistake by crediting the loan account with the 1,45,000. Then at the end of the year he has made one more mistake of charging interest. So you have to debit staff loan, credit interest income 45,471 because 40 is already credit recognized. Did you pass this entry? Yeah, understand now? Now you understood why we have to pass these entries. And then employee benefit to discount, which he never passed only because he never did this classification. That 1/5 he should debit, no? Perfect. Which one? That's first entry we passed. No, there was a mistake because 8,54,000, and that is possible only by rectification of this 1,45,000, removing that component. Rectification, no? Because if you don't pass that entry, how you will get the closing balances in the balance sheet, Baba? Because 10 lakh is overstated, no, loan is overstated. And where is the question of discount? If you don't pass rectification entry, where the discount is going to come? Notional interest. Why? Because already 40 is already debited to P&L account. You will charge only additional. In the previous question, you did full because he has entire amount he has taken to retained earnings. In this question, he took to P&L only. There was no confusion. He didn't took to retained earnings there. But what he took to P&L was short debit. Have you understood the difference now? One was the preference capital, one was the employee loan there. And you see how much technicality is involved. Simple. At the outset, is it not simple? It's very simple. But you see how many challenges are involved. Now you have to prepare, other than NCA not given in study material, non-current assets, employee loan more than 2 years, 1 year will be 538, and the non-current assets prepaid employee loan, how much? 145 you initially recognized. 28,058 you charged off to the P&L. Out of one more 28 in next 1 year you are going to do. So 87,172 will be your non-current portion. Now come to the current portion. Employee loan, that 7 lakh what is there in the balance sheet minus 538 is your current portion. And non-current is that one leg of 28,058. Are you clear? Loan account debit to interest. Full amount, no, because already he has already debited, no, and he has paid also. No, that you should have initially reduced loan amount. And then again, why you debited loan with the, again why you increased with the full interest? Because already some portion of the interest was already recognized by debiting into the loan, and that was received also. Bank account to loan also he has done properly. Bank to loan, that whatever contractual rate he has considered, no. And because of this, your loan balance is going to increase now. Because you received only contractual amount, but what you claimed is an interest at EIR, which will get settled at the end. Differential portion. Clear? Now, deferred tax on the temporary differences should have been recognized, and in the absence of tax rate, we didn't do it. Deferred tax might be there, no? Because will income tax recognize your EIR? Income tax says I will take your contractual rate, no? So whenever that repayment and all, discount and all you will claim, at that time you will pay. Okay, anyhow, that this part is not there, not given in the study material, but somewhere RTP, MTP they had given. So mark analysis would have been like this as per me. Analysis and recognition of measurement loan, not more than 1 mark. If 1 mark, how much theory you will write? Correct treatment of the loan, 1 mark. Calculation of the fair value, 2 marks. Schedule, 1 mark. Analysis, because if I order all these things, 4, 6, 7, 8, 9, 10, 11, 12 marks is going to be. Clear? Yes, now this question came in the examination for 12 marks. Already you know now how the mark allocation is going to happen. Out of this, this is theory, calculation, analysis of the employee cost, correct treatment of the employee cost, balance sheet extract. Okay, I can say somewhere here 2 to 3 marks is a theory in this 12 marks. Okay, even though I consider 2 divided by 12, 16% is the theory. 20% I can take. Your any FR paper will have 20% theory. On 1st of April, Star advanced a loan of 15 lakhs to one of the employees at the interest of 6%, 5 equal installment, not required to give any performance. Market is 10%. Accountant recognized the staff in the balance sheet equal to the transaction value only. Interest income is recognized at a contractual rate of 90,000 rupees on 6% on 15 lakhs. Same story, only numbers are different. Analyze, see the proper work, whether the above accounting treatment is in compliance with the Ind AS. If not, advise the correct treatment of the housing loan, interest and other expenses. See the clarity what they have got you in the examination question. So should you not speak about the deferred expenses and all? You have to speak simply. You cannot do one working. You have to tell 1/5 of this should have gone to P&L account. Why? Because he is an employee covered by Ind AS 19. Along with the workable and applicable Ind AS. Now, one more twist comes in the examination. Somewhere from the RTP or MTP, they will pick which was not there in the study material. You are required to explain how it will be reflected in the balance sheet. See the word. This is, I don't know how to explain it. They should have told, please present how it is presented, reflected. But what they mean to say, they want you to present it. Prepare the extract of the financial statement. Followed, no? So if they give you any solutions, please give importance to it. Trust 90% of the time, because questions would have been framed keeping those solutions in mind. Or forget it. If you don't remember the solution also. Can you, from this you can able to figure out how many components are there in the question. Yes, so we have understood the mark allocation and all. Any mistakes was there in the previous question? Yeah, I can. Extra question means your balances will move, no, change. Okay. That's okay, leave. Extra something going, they will do. It is not going to affect, leave it. Doesn't matter. Whatever required you have given. Yeah, that will show, that will get reflected that you have got confused. Like in the first question, like they said very clearly revaluation model. I overread it. In the study suggested answer, if I go and say if cost model is followed, if revaluation model is followed, he may give you, but alternatively the institute might have given one strict instruction. If students write alternative answers, don't evaluate it. No, what I mean to say, you remember that examination question came twice, that PP1 cost model, evaluation model, this. Now there are 2 times came. Now when it came for the first time, yes, 2 alternative assumption was there, if cost, if revaluation. In the second part, second time when it came for the exam, because we generally see that second time when it comes, now it's the dangerous, like ignore decimal thing. Now if some students would have written the same story and expecting that, look sir, on one leg I have written no revaluation model, institute might have given an instruction, only and only if student has given only one part, evaluate it. On basis, because question is very clear, no? Company is following revaluation model. Followed, no? See, don't expect that when the question is, no, what I mean to say is, it is specifically given. But somebody might have given if cost is followed, if revaluation is followed. Institute may not evaluate both. That's what I am trying to tell you. Institute says that you are not clear. When I am telling very specifically in the second examination question that it is a revaluation model, you tell revaluation model, no. Why you want to tell? It's like somebody wants to do CA only and they came for your advice. When they are very clear about CA, why you want to tell about MBA to them? So that instructions could have been there. That's what I mean to say. Even though your answer is perfectly correct, you might find 1 0 marks there because there was one disconnect between question contents and your assumptions there. That's why reading that particular sentence which you observed and told me, I also overread it. So that can be, and if lenient correction is there, if that your paper went very tough, then institute must have told, okay, do Baba, Even though somebody would have given this, do it. So read, spend time on the question. Okay, can I proceed here? It's the same, no? Followed, no? Okay. So we'll proceed here because it's the same thing again. I know that you must have understood your mistake. That's why I told you first time do it. Because if I would have did first time and tell you do now, it's the ditto question. There is no change. So recognize your mistake. So first you tell about this story. Need not write all these stories. Okay, you see the pattern of answer. 109 financial instrument, initial recognition should be at a fair value, transaction price, classification. Loan is not at a market value. See, simple, short, suggested answer. So fair value will not be equal to its initial recognition. Interest should be at 10%. Finish. You told for 2 marks or 3 marks how much sufficient. You told. Now correct treatment should be, you should have found out the present value and do this. So what is the present value? So you find out the principal, interest, repayment. Take the present value, it comes to 13,54,000. In previous study material question, it was 850. Okay. What is next step? Is to prepare provisions of Ind AS 19. You have to say that differential portion should have been employee cost, irrespective whether employee is not required to give any specific condition or not, assuming he has to be in service. Because he has to be required to be in service. So practically, if the employee leaves, then he may have to repay it. That's why I am going to amortize it over next 5 years. Amortization will be 1,45,000 and every year 29,080 I am going to charge. Next amortization schedule we are going to prepare, and we know that total amount should be this. The breakup is 8.38 minus 11 minus 8.38. This is current, this is non-current. Then I will go to the journal entry. First I will debit the employee loan, debit the discount. Okay, here what they have done, no? They have passed the journal entries as if there is no rectification, there is no mistake. No problem, you could have alternately given the rectified entries, and they have passed normal entries only. Okay, question is like silent, no? Or have they told that employee made a mistake? Yeah, and in fact, if you see, they didn't tell you journal entries, huh? Rectification journal entries. Previous, I think, question they have told, no? Rectification journal entries. Anyhow, you can give alternative. I don't suggest that. You could have given the journal entries, but very importantly, they asked you to present the balance sheet. 8.38 is an employee loan, prepaid loan will be 87,238. Now the current assets will be 2,61,000, the balancing figure, and prepaid will be 29,080. Now one more version. Okay, deferred tax part we can leave in. Test your knowledge, they asked you one more version. On 1st April, 8% convertible loan with a nominal 6 lakhs was issued at par. Alternatively, they may be converted into equity shares on 100 new shares for 200 worth of loan. An equivalent loan would have been 10%. Interest has been already paid and accounted as a finance cost. Explain how will the company account the above loan notes in the financial statement as at the end of the year? How do you say? Oh, 1 minute. So first thing, sorry? You have to explain. See, first of all, you have to explain how to account the above loan. So you need to look into the components there. And then you have to say that, look, I have got an option, is going to pass fixed for fixed test. So the nature looks like it is a compound financial instrument. Okay, now can you do one thing? Just tell me one number. How much additional finance cost I have to debit, because you have debited 48,000, no? Just tell me one number, how much finance cost we have to debit. Yeah, I think this is the last question. No, one more is there. Yeah, just do the calculations and tell me how much finance cost should be debited. Yes, students, so pause the video and do this working. Yes, students, so we'll check the answers. First of all, whom you need to explain? You need to explain to the accountant. Accountant is in a confusion now. Sir, how to account this type of instrument? For the first time in his life, he must have come across that convertible instruments and all. So use step analysis of the instrument. So you have to tell there is a contractual obligation plus an option. The obligation is to pay the cash of principal and the interest, and option is convert fixed shares, which passes fixed for fixed test. First is a financial liability, so it is a compound instrument. Maybe I will allot 1 mark for this particular portion of the theory. Now, since it is a compound instrument, you need to follow split accounting. And to do split account, you can write, say for a compound instrument, split accounting has to be allowed, performed. To split, we need to know the fair value of the debt. So write step 2, financial liability element will be the present value of the interest component at the market rate of interest, equivalent loan. So my transaction value is 6 and the present value of the two cash flows is this, 39,840 will be my, how much? 1 mark, not more than this. But you have to explain it, that it is part of this way we calculate it. Did this number come in your answer? What went wrong? I am interested to know now. Okay, wait. Have they told you anything? Option is in whose hands? Have they told you is the option is in whose hands? No. Now let us go back and try to understand what reasonable assumption I should make. In Ind AS 109, have we solved single question where you talk at any compound instrument where the option was in the hands of the entity? No. In entire thing we came across only one question in EPS where the option was in the hands of the holder. So the reasonable assumption, when the question is very silent, we will assume that the option must be in the hands of the holder. Followed, no? Because this assumption will take entirely different thing only. Now probably that accountant also must have taken, that's why you will not get the same, you will get the same amount. Then what you will answer? Where is the mistake? You will not get that. Followed, no? Because entire instrument you would have accounted it as a either taking equity or financial liability. That means then what accountant did was correct. Or if you would have taken equity, then you should have taken that amount to the other equity then. Yes, any other mistakes? Yeah, off market. See, by that you should make a understand this is off market. They have told so many things they have told. So it must be my, yes, any other mistakes? Yes. Then followed, no, see this discussion happened, then only we will come to know other perspective, how others will think, or maybe in examination we may think like that. God knows, no? So learn from everybody's mistake. Entity shall recognize an interest at the rate of effective. You have to tell that subsequent accounting because he has to explain, no? And 48,000 has been recognized in the P&L account. So additionally, you have to recognize at the rate of 10% on the opening value of the debt portion. So 56,000 should have been recognized, 48 is already recognized, 8,016 is the additional amount. Is this number there in your answer? So this is what I am expecting. Any mistakes here? Yeah, once if opening gone means cascading. Yes, Prithvi, Aditya, anything here? Yeah. No, that's what, no, that's cascading now. Then that assumption goes wrong means here also it will come now. Then rectification entry, you would have given finance cost to convertible loan. And I need not split there because accountant has not passed any mistaken entry. No, he asked please explain. So in this question we are explaining to them, assuming that there is no mistake, and we just ask our guidance. Now if you look at the solution balance sheet extract, it is not given in the study material question, but why we are doing it, I will tell you, I will show you. Follow, no, this is the balance sheet extract here, where equity portion I will show in the equity, where other component of the compound instrument, liability portion I will show here. Again, non-current, current liability, I don't know whether I have done or not. Leave it. You know now, current liability, non-current, how to present it. Then I will show you one November 2020 examination question. I think it's the same thing, advanced loan of, no, this is the first question we solved, no? Now, they have told you are required to explain how the loan should be reflected in the compliant balance sheet, 12 marks. Okay, no, I don't know why I have given it here. Suggested answer. Sorry. Yeah, following housing loan, extract of the balance sheet, loan to employee. Yeah, this current and non-current portion. We have done, no, 8,38,000, 2,61,000. No, maybe I must have missed it. But see, one of the examination question, they have given it. So, I hope with all these problems, you must have got one fair idea. Rectification mistakes can happen. They may ask us to explain. They may ask us a balance sheet extract, rectification entries, calculation of the values. So, you figure out your way. Okay, on the last one question which has come in your November 20 exam for 6 marks on this one. Forward, no? They have made a mistake. This is a mistake. So, they have already charged to P&L. This is a mistake. So, that means their classification and all must have been wrong. But again, principal portion, if you want, you could have assumed and passed the entries. But in the suggested answer of this test your knowledge, there is nothing like that. See, with all this thing like one place extraction, one rectification entry, one normal entries. See, now one element of confusion is created. It could have been at the option of a perpetual bond. If interest portion only, you would have been taken the present value and all. But again, we have not come across that type of problems. Yeah, principal. Okay, are you clear, students? So now you got one end-to-end flow. In that end-to-end flow, you know, starting from first analysis, amortization schedule, balance sheet extract, rectification entries. So you could have passed end-to-end entries. Okay, last question. On 1st April, 8% convertible loan nominal value was issued. It is redeemable also at par. Alternatively, it is converted into equity shares of 100. So, same question came for your exam for 6 marks. This time they asked you, see the question here. An equivalent loan of 96,000 already paid. How much in the study material question? 48 into 2, 96. Very clear. Now, they give you 2 present value factors. And we know that we have to take 10%. But the question is, how do you present above loan notes in the financial statement? So, followed, no. You can restrict your analysis answers accordingly. See, I cannot tell you, students, what you need to do. You have to take that judgment. Now, if you find, no sir, I have to explain more, you try it later. Because you have to write worth 6 marks maybe, and they asked you, how do you present? Okay, so that means fair value calculation should have been there. Maybe you can tell, you need not speak about what is that called, compound instrument and all. Speak, or if you want, just tell one word, because you know that it is a study material question. You need not explain so many details about it. First component is this, second component is this. But do a fair valuation working and do the calculation. Okay. But balance sheet extract is required. For this, you need to prepare an amortization schedule, because you always please, whether they give an in the previous question or not, you give current and non-current. Balance sheet they are not given. I told you in the study material solution, they didn't ask you. I gave this. Next, I told it is the November 20 question. Okay, somewhere I think two questions are there. I think in November 20 in one examination, 2 questions must have come. Yeah, in the suggested answer in the balance sheet they have done. This is an examination question. Here the balance sheet has been done because the question is specifically presented. So one place they will ask you explain it, and place they rectify it, one place present it. So you have to apply your judgment. What we have, it was there, no? 2 questions in the same exam, no? This is a bumper then. That means here there is an analysis question, 18 marks. That means one examination somebody gambled with the financial instrument, no? Attempt came down first of all by that first question only. Like my costing, no, I gambled with standard cost. Attempt itself in 84 marks. First 16 marks compulsory question. This should be a strength. I told you, no, that student, first financial instrument, 14 out of 14. That should be your strength. So develop some chapters as your core strength. Attack that first. Others will follow. Okay, so first we will write a small option, that is the compound instrument. We will calculate the fair value and this component, because this is required only. If they ask you please present, without this step not possible. Okay, I will proceed further. Then statement of the P&L also they are present. What they asked you to present? In the financial statement, that means your P&L also will come into picture, no? 1 mark they will keep here reserved for the P&L, which not asked on the question only, is not there in the study material. So finance cost is so much minus so much, 16,000 will be the additional charge. So balance sheet extract would be looking like this, where they have not given the breakup. Alternatively, you could have given the breakup. Okay, take out question number 17. You see which standards will be included here. Pluto has purchased one manufacturing plant for 6 lakhs on 1st April. The life is 10 years. So you know that 60,000 rupees depreciated every year. Now 30th September, they temporarily stop using the plant because the demand has declined. Can they do that? And that is a business decision, no? However, the plant is maintained as a workable condition because you may need it any time. You didn't shut down it fully, but lower the level of production and all, you just maintain on a standalone basis, something like standby basis. Now this is great accountant, what he did, no? By looking all these things, he decided to treat the plant as a held for sale until the demand is going to pick up. And accordingly measured the plant at the lower the carrying amount and the fair value less cost to sell. Understood? Also, he stopped charging depreciation for rest of the period, considering its plan to held for sale. Yeah, if it's held for sale, then you should stop depreciation, no? So he treated that and stopped depreciation. The fair value less cost to sell on 30th September and 31st March was 4 and 3.5. What was the book value on this day? What was the book value on this day? You purchased 6 lakhs on 1st April 2011. Now you are 2.5 years old, 2012, 13. So per annum depreciation comes to 60,000. So 60,000 into 2 plus 30, 1,50,000 would have been accumulated depreciation minus 6 lakhs. 4.5 would have been your book value on this day. Now on this day the fair value was 4. That means you must have charged 0.5 to P&L account as an impairment on the date of transition from NCA to PP to NCA. Now again you stop depreciation. So what is your book value? 4 only. At the end of the year again 3.5 was there. You should value at the previous book value or fair value less cost to sell, whichever is low. Again you would have charged 0.5 to P&L account. At the end of the year you must have kept at 3.5. Okay, so now this information is ignored in the solution. If classification changes from PP to NCA, then this information would have been useful. Otherwise, why I need this information? I may have to only test for impairment. Now, accountant made one presentation how carrying amount on the initial classification is 6, depreciation is 1.5. Now, fair value less cost to sell on 30th September is 4. The value lower above the 2, 4 lakh he did. And now at the end of the year, you classified it as held for sale and one single figure of 3.5 you must have debited. So here 50,000 went to P&L account, here again 50,000 went to P&L account, and from 4 you would have shown 3.5. Analyze whether the above treatment is correct. If not, what should be the advised correct treatment? Why? When you can classify held for sale? When you have decided that the money what your cash flows what you are going to get is primarily by sale, not from the using, your answer will start. In that case, you will have considered to be held for sale. Then that's it? No, the sale must be highly probable. So there are certain conditions of high probable. So what he did was not correct, and what he should have done, continues charging depreciation and check for impairment. Maybe this value is correct, because if you would have continued with the depreciation, 60 into 3, 1 lakh 80 minus 6 lakhs, 4 lakh 20, but fair value is less than this. Okay, you can make an assumption. If your value in use is less than this, maybe impairment you could have charged, but the classification and presentation was wrong. Let us see what they say. They say that it should be recovered primarily through sales transaction. This should be there in your answer. For assets to be classified, and sale must be highly probable also. So you should call now 105. Now when you call highly probable, management should have committed, it should have been actively marketed, completed within 1 year. None of the things are done here. And alternatively, you stopped temporarily, and that is not considered to be held for sale. You have to tell that also. Further, in this 105 specifically says that if you have abandoned it, or if you have temporarily taken out of use, you should not classify it as held for sale. Maybe you can scrap it, because it was not a case of abandonment. Maybe these things you could have scrapped it looking at the marks, because this is not primarily that reason. You can write first this first sentence, first para. You could have written this. Straight away you could have come to the last point here, like assets temporarily held is not permitted. Now in day 16, depreciation, can you stop? No, you stop depreciation. No, that is also not until it is fully depreciated. So in the given case, what his treatment was not correct, depreciation should have been continued to be charged. Above treatment should not as per 105 and 16. So correct treatment, you should have continued charging depreciation, and asset could have tested for impairment if there was indicator. Again, question is very silent about value in use and all. So it's left to your assumption, okay, whether it is you should charge depreciation or impairment or not. Thus, impairment cost calculation will be, so you say that WDV is 4.2, recoverable amount, value in use is nil, net fair value is this. So assuming to be, they didn't give, no. So temporarily suspended. So you will not be able to estimate it. That does not mean that does not have. But since you are temporarily suspended, you are not in a position to make one reliable estimate of the value in use. It has got a value in use. So for comparative sake, you can assume it to be 0. Whichever is high is a fair recoverable amount. 70,000 you could have charged, and the presentation would be same, 3,50,000 only, but as a PP, not as a held for sale. Have you understood in detail? Now this question, I believe, see, this would have been allocated marks, analysis of the mistake, analysis of the indefinite. 4 marks would have been got for that analysis part, because if you see what is there other than that, is there any this thing like correct treatment, again 5 marks, impairment calculation, balance sheet extract. So out of 8, 3 marks would have been given to you for doing what balance sheet extract and other things, because this question came in your November 18 examination. Sorry, May 23 also it came. See, 2 times it has come. I have given together. Maybe probably there is separate, no, different question, one below the other. No, November 18 question, and in the same box I have given May or after question number 19. Then we will see what difference is there. So this question must be, as far as I make a pattern, the first question what comes, no, must be from the study material assumptions and all. Second question may be some element of twist may be there if it is repeated. Since provide the balance sheet extract. See, they said very clearly here, no, analyze and if not advise with the correct treatment, first question. Okay, extra para, we'll see. First of all, PB purchased a bottle 24 lakhs, 30th September temporarily stops, demand declined, plant is maintained workable, accountant decided to use as a cost to sell, accountant stopped charging depreciation, fair value less cost to sell on 30th September, 31st March, 13.5 and 12 lakhs. So if you see this exam question, okay, that 13.5 is totally ignored. If you see our statutory knowledge question, that reclassification day fair value has been considered as a presentation. That means 2 times they charged impairment, but here straight away they went, you see, no, very odd way they presented. In study material, the presentation was very correct. Have you observed here? If you are doing current carrying amount on initial classification, how many years over? 1st April 2015, 16, 17, 17 and a half, 2.5 years over. 16.5 should have been compared with which fair value? 13.5. This is what they have done in the study material. But they compared with the end of the year. So your assumption is it was already compared 13.5 with 16.5, or they ignore it. I don't know, because if they would have compared, then 13.5 would have come here. So you have to just ignore this information. Huh? Otherwise you will get confused in the examination hall. What they are comparing with what? You understood, no? Even though there is a repetition, they have created a confusion here. Study material, there was no confusion. It was very clear that 30th September fair only you considered. But ultimately, the question is that entire treatment, whether you take it on 30th September, whether you take it on 31st December, your treatment itself is wrong. No, so does it matter which fair value you have taken? Asset balance was correct. So analyze treatment and not please suggest. So answer format is same, you call 105, I will proceed further. 105, then you call sale probable, asset should not be temporarily taken out, should not be classified. So in the given case, and in 16 also you should continue to charge the depreciation. In the given case, accountant has done wrong, depreciation also should have continued. So correct treatment is you should continue charging depreciation and you should treat it as a PPE. 1 minute. They said temporarily stopped. They didn't abandon it. It is temporarily stopping usage. So impairment calculation also they have done. We know that 3 lakh would have been the impairment, where you would have charged depreciation for 3 years. At the end of the year, 3 years would have been the depreciation. Okay, students, any confusion? So balance sheet extract would be same. Everything is same, but they created a confusion with regard to the fair value deduction in the exam question. Now this question again I think has come. Okay, this is the question, question 19. No, in the one para only I had given. Okay, maybe in the your question I told, what is that? I have told you that separately, no? Extract from the. Yes, friends. So you are clear, no? Okay, so that means when the one more pattern what we have observed, what you have understood is, once the question what has come will come again. That means either the first question would have been tricky. This time they will give you as it is from the study material, easy. Or if the first question must have come as it is from the study material, this time they would give you tricky. Something would have happened. Followed, no? So see what I am telling you, when you read the question, no, you will almost understand. Oh, this is a question, because already I have included all the questions there. So you will make out. Yes, so now we will move on to question number 19, your favorite 115. You have so many theory you have to write. By default, theory only. Mercury has sold goods to Mars at a concessional consideration of 10 lakhs. And you have to receive in 3 installments, and the first installment is April only. We have done this question. First, I believe, first or second question was this deferred consideration. Now the company is offering, I think we have done in PP, first question of the PP somewhere with the deferred consideration. We have written it from the PP perspective, but same should be for that. Company is offering a discount rate of 5% if payment is made for full. That means 9.5 is the cash price and implicit rate is 5.36%. So if you discount 9.5 in the future rate, it will end up with the 10 lakhs. These are all the CF, cash flows. Total consideration is 10 lakhs, hence the management recognized the revenue from the sale of goods 10 lakhs. They passed accounting into customer due sales. Now, further the management, this has been removed from your new syllabus. Further the management is of the view that there is no difference in this aspect between Indian GAAP and Ind AS. And this sentence has been removed from your new syllabus study material. Analyze whether the above accounting treatment by the accountant is in compliance with the Ind AS. If not, advise the correct treatment and also show its presentation in the P&L account and the balance sheet. Okay, this part is not available in the study material but available in MTP. Suggested answer it is there. Of test your knowledge, suggested answer, you will see that. Question doesn't ask. Followed, no? But in MTP it is there. That means probably they may ask you in exam also about the presentation. Yes, students. So what is your opinion? Can you give me the extract of the financial statements, which is P&L and balance sheet for 2 years, 31st March 2012. Theory, I don't want you to tell because we will discuss. But calculation part, you should be very thorough. How much should be my accounting entries? What should be the revenue entries? How much should go to the P&L? Balance sheet, how it would have looked like. Okay, and classification into current, non-current may not be required here. Because everything is current only at the end of the year. They are not asking you at the beginning of the year. They are asking you at the probably at the end of the year. Question is very silent here. Beginning of the year means you are not even recognized in interest also. So interest and all should come, no? So they want you to do the balance sheet for 2 years. Can you do this? Balance sheet extract and P&L extract for 2 years. Interest expense is going to come for 2 years. No, because there is one significant financing component here. Are you not supposed to separate it? Was their accounting entry correct? Customer account debit to revenue 10 lakhs. That is wrong. What should be my accounting entry? What should have been my accounting entry? Huh? On day 1, what should have been my accounting entry? What entry they passed? Customer account debit to, is that entry correct? No. What is the entry? Tell me their entry. Tell me their entry. Yes, Aditya. You can just share what entry they must have passed, no? They said as per accounting standard. So they must have passed as per accounting standard. Accounting standard, have you come across concepts like performance obligation over a period at a time, a series of distinct? No. Simple, risk and reward. Did you transfer the risk and reward? Yes, then may you recognize. What entry they must have passed on day 1? Simple. Bank account debit, revenue. I will tell you, revenue 10. How much? Tell me then. 3333. How much? What they did, I say? Bank 3.33. Customer, how much? 6.67. Yes, this is the entry they passed. They said very clearly, no? They said very clearly that the management has recognized revenue from the sale of goods for rupees 10 lakhs. What confusion is there? And they are telling that, which they removed now, this is same as per your Ind AS also. And they are trying to argue with you. Then you tell them, please go through. At least Nagabhushan Paisar's chart book also you take. Tell anyone. Then in that very clearly told that this 10 lakh cannot be your revenue. No, why? Why? Tell me why? Why 10 lakh cannot be revenue? What is your answer? If in the interview, I'll ask you one question. Why 10 lakh cannot be your revenue? What is your answer? Huh? What is it? You tell me in India's language. Huh? What is your answer? Will you call interest? You say, sir, 10 cannot be because 10 is the transaction price. But this transaction price includes significant financing component. When you write such an answer for the in the examination, no, if you write, see, I am not telling, they may give you mark also, but that is a very professional way of writing, that the transaction price includes one significant in financing component element of how much? How much? How much? Come on. Everything is given there, no, in the plates. In one plate, rasgulla is there, gulab jamun spoon. Eat, no, 50,000, they have told, no. But don't expect this 50,000 in the examination. They may expect you to calculate the present value of this. Followed, no, this may go for 3 years now. When they ask you present value, the first installment is already received there. 33 and 33's present value you have to find out. At the rate of market, implicit rate of interest there, 5.36. Followed, no? That 3.33 present value for year 1, 3.33 for year 2. When you take 5.36 present value plus 3.33, which is already 1, present value factor was 1, together 9.5 is going to come. Now clear? Okay, now tell me, since I told you everything now, what is my first entry should have been? What should have been my first accounting entry? Bank account debit, how much? 3.33. Agree? Aditya, you agree with me? Then tell me the second leg. To revenue, how much? Have you not fulfilled your performance obligation? Should you not recognize your full portion? Is there anything pending from your side? Then recognize full, no? At what value? What the standard says? At a transaction price. And if in that, what is the transaction price? How much he will give you? Not more than 1 rupee, not less 1 rupee. How much? 10 lakhs. But if it includes significant financing component, remove that and record at 9.5. Your revenue is not 10, but the 50 is a financing component which you are earning over a period of time there. That's why you remove it, because assuming it to be significant. If you remove it, then how much you are going to debit to the customer? How 6.66? 6.17, no? Present value of that, the 50,000 rupees, will you debit him 50,000 rupees? He will ask, sir, wait for me, no, to complete 1 year, because credit now only you are giving and now only you pay me interest. Who will pay? He will pay you interest for the credit sale at the end of the first year. And the amount of credit is involved 66 lakh 60,667. Are you clear? Perfect. Okay. Now at the end of the first year, what entry I'll pass? Customer to interest income. How much? Simple. Is this customer not your 109? So if you not 6.17, are you not going to recognize interest at the rate of 5.36? How much it comes to? 33,053. Will he not pay you bank now? So next one more entry comes, bank to customer. Now you have to just tell me how much is my interest income in the second year. In the second year. First year income is 33,053. How? 6,17,000 into 5.36%. 33,053. You have any doubt? No. Can you tell me like this interest income for the second year? See, I can show you, I can do it. 0.15. Tell me in rupees absolute value. No confusion should be there. I want the interest for year 2. Because with that, final EMI account should get closed, no? 17,866. Okay. Any other numbers? 16,000. Are you confident about these numbers? You have to be confident, Baba. You have to be very clear. Come on. This number shows the clarity. You should put your stand and say, like, this should be the number. How it will be different? It is accounts, no? Is it something else there? Even though it is not a rocket science, but reasonably you don't know what should be the debit and credits. Yeah, it's simple. We complicate it. Is amortization schedule coming in your mind? What's that balance? That's what I'm asking you. Is amortization schedule coming into your mind? Then if it is going to come, you started with 6.17 plus 33.03 minus 3.33. That becomes your opening balance. Now on that you calculate 5.36. No, it comes to 16,947. Do the alternative. Followed, no? With all these things, what happened? No, you are thorough with the journal entry and you know what you need to present. Okay, how to analyze this? Simple question. Simple question. I admit that first. Whatever, Baba. No. Tell me till now, did we discuss any complicated question? Every question is simple only, no, after discussion. Or more than I can say, after discussion it is simple, after you have understood it is simple. So tomorrow I may not discuss all the question. You will come across one new question. Spend time, understand there is one simplicity. It is simple. Okay, then you don't need me anymore. You are self-sustained. Otherwise, you will look for my updated video classes or updated things. That should not be the practice. Like, you are self-reliant. Any new thing comes, you should be knowing it. Okay, good. The revenue from the sale of goods shall be recognized at a fair value, less consideration, and you have to discount the future reference, and the difference will be the interest revenue. This you can explain in your language. You can say that 115 significant financing component can be reduced. That is the difference between the cash price equivalent, which is the in bracket you can write fair value, and the transaction price. Now what is the fair value of the transaction? You find out the present value, it becomes 9,50,000. Why did they do it here in the solution? Probably in the exam they may not give you. If they tell you that in bracket 50,000 value, then this working is not required. Followed, no? So you found out that, and company will have to recognize and pass this accounting entry where that 9,50,000 you are going to credit and 6,16,000 you are going to debit. If they ask you rectification, you would have passed one debited revenue 50,000 and credited customer with the 50,000 because they recognized customer more. Going forward, this entry to never passed only, and we have to pass this entry. They passed only bank to customer. But what going to get credit to the customer is only 30 because 33,053. Second year it is 16,947. Okay, you can take it as a balancing figure straight away with simple technique because it's only second year. If it was a third year, then you should have done this 6,67,000 minus this amortization schedule. Simple. And my EIR is that 5.36 only here. So P&L extract would be in the first year in the revenue you would have shown sale of this thing plus interest income of 33. And in the second year you would have shown 16. So what did they show? Entire, without any classification, they showed revenue 10 in the first year. This is true and fair presentation. Your 10 is not a true and fair presentation. Now you go to the balance sheet, you show trade receivable only 3,67,000 in the first year, and that too you show under current assets because next year it is going to become 0 because first EMI was at the beginning of the year. Entire question is going to twist if the first EMI was starting from the end of the year. Followed, no? Then at the end of the second year there would have been one more current, and first there would have been current and non-current. Two classification would have been there. One simple change, that the date of payment is the end of the year. Perfect? Clear, no? Concepts are very thorough. So now one more question of Mr. X is the financial controller of the listed entity which prepares CFS. I think we have come into the CFS zone now. X is the financial controller, which is you, of a listed entity. Prepare CFS following Ind AS. X has recently produced the draft financial statement and the managing director's approval. He went when on 31st March. You understand this story. You are that CFO or business controller, not business controller, sorry, finance controller. There are two different roles. Business controller is not involved in the financial reporting. He is involved in the like with the management there, on the ground level. He is not sitting in the AC room there. He will go to the plant, he will check the inventory, taxation impact, those things. Finance controller is the one who sits and manages the treasury, financial reporting, MIS, back-end job. This is the back-end job, which doesn't give you growth options. This business controller is something which is a very powerful, which will give you a lot of incentives because it is directly connected with the business. Now he went to the managing director and showed the financial statement. Now the manager is the managing director is not an accountant, because Ind AS is not meant for non-accountants if the transactions are not at a fair value. Correct? Now, otherwise anybody would have understood. Now this person raised certain queries. One of the notes to the financial statement is giving a purchases made by ABC Limited from PQR. Now who is PQR? Why? Who is this managing director holding 100% share of the PQR? Followed, no? Now you are ABC and there is PQR. You are the managing director of this and you are holding 100% control. Are these people related? Yes, because on one leg there is a significant influence here, on the other leg there is a control here. Now both are related. Now the disclosure said the financial statement are carried at a normal commercial transaction and the term is totally insignificant, amount is very small, chiller 1%, and that too at a normal terms only. There was one note. Now why got furious? Because it is his company, no? And in the company's ABC financial statement, one disclosure is coming where Y is interested, managing director is interested. Now somewhere he doesn't want this notes to accounts to come. And he's telling, Arey Baba, why you are disclosing this? See, first of all, it is related party, I agree. But I look at the amount, no 1%. And look at the terms, it is normal commercial. So don't give this note. What do you say? You say, no sir, this cannot happen. If I don't give, then your auditor will sit on my head there. Because it's a related party transaction. As per Ind AS 24, even though it's an arm's length price and even though it's immaterial, you have to give disclosures. This is the answer for this. There is intercompany, there is no intercompany, no. It is a totally unrelated, independent company. Managing director is the owner of this company. Is the managing director owner of this company also? No, he is only having some significant influence because he is the KMP there. Because of this intermediate person, these two companies have become related parties. So in the financial statements of ABC, they have to give disclosure that how much sale or purchase has been done from that related party. Which the managing director is telling, don't give this because his name will come now. Either maybe he is not okay. Now the notes to the financial statement say that the PP is held under cost model. Okay. However, the property which is owner occupied is revalued annually to fair value. Plant and equipments is under cost model, but the property which is owner occupied is revalued. Property means some building is fair value. Is that okay? Both will come under which head? PP. But under PP, can you follow cost model for one, revaluation model for someone? Yes, no, Baba. This is what we discussed. Office building, you can do revaluation model. Factory building, you can do it. A plant and machinery, you will do under cost model. Office building, you will do under revaluation model. You can do it. See, if you are getting confused, then of course, what you can expect from that managing director? That was his confusion. Why you are showing like this two things to different way? One more fun. He says that, okay, Baba, no problem. You have showed it, because then you will explain it. Sir, it is under PP, there is something called a class. Ind AS 16 has permitted me to do cost or revaluation on class by class basis. Managing director said, okay, Papa, I don't have any problem. But he got one more confusion. Now you have done fair valuation. Changes in the fair value, sometimes you are reported in P&L and sometime in OCI. Why? Then you tell the story, sir, first time revaluation I should take to OCI. Second time revaluation I am taking to P&L because last time it would have charged to the P&L. To reverse that effect I have taken there. Also the amount of depreciation charged to the PP means equipment as a percentage of the building is much more than the owner occupied property. What is your answer? He is telling why you are charging low depreciation to the building and high depreciation to plant. Plant life, you should tell, sir, building life is 20 years, no. Obviously, my depreciation will come low. Plant life is only 5 years, depreciation should be high. Now he will understand. Also, another note states that the property owned by ABC, but to rent to others, is depreciated annually but not fair valued. What is your answer? I am MD, I am asking you. Huh? That's your answer, sir. It's an investment. That means in this question there is no mistakes. There's only confusion. Somebody is asking you, who is that managing director? That says that there's an investment property and fair value is only disclosed as per Ind AS 40 and you cannot fair value it. Mr. Y is of the opinion that there is no consistent treatment only. God knows what type of Ind AS ICA has come with. It's creating so much confusion for us. Then you should say, sir, confusion you are creating because of your business practice. Who told you to follow cost and revaluation model? If you want to do it, say it together, no. So maintain cost for all, including investment property. Fair value, no, I will not permit that. So elucidate how this treatment comply. Means compliance is there, you have to explain now. Followed, no? Nice question, right? See how many issues, 4 questions in one point they asked. Maybe in the exam they may cut down. One more, in the year March 2018, ABC spent considerable amount in designing a new product. It spent 6 months from April to September in researching and excharged the research cost to the P&L account. Can they do it? Is it correct? Correct. From October, you are confident that you can commercially be successful. So spend remaining part of the year in developing and expected cost, and this development cost has been recognized as an intangible asset. State whether the treatment done by Mr. X is correct. Correct. Now provide your answers queries to the raised by Mr. Y. Now he is a layman. He doesn't understand only why we are done. So what we need to tell here, and no verb, if you observe, we have to tell calling, look, this is the, sorry? In your new scheme, I think they have added, I have added that. In the new study material, what is the difference between the old study material and new study material? People will say question is same. Baba, question is same. Who told? No. See, one word called advise has been added. That's a verb which was missing in the previous syllabus. And when you advise someone, you simply cannot advise without any base, no. Your base will start with the as per Ind AS so and so. Follow? Okay, again, it's a very simple thing. Related party, you have to explain first. Ind AS 24 says that KMP is a related party. That means your director is a related party, and if the director is having some control, that is also a related party. So even though it is an arm's length price, even though it is immaterial, you have to disclose in the notes to accounts. This is what your Ind AS 24 says. So in the given case, yes, Y is a KMP, he has got a control over PQR. So PQRs, you have to tell who is related to whom here. Doubt is not whether managing director is related to, no. Whether that PQR is related to the ABC. Yes, you have to explain like this. Yes, through this indirect relationship, PQR becomes related party of ABC. Thus, this disclosure note, whatever was given, has to be given even though whether they are immaterial, because by its very nature, related party transactions are very material because there can be one fraud involved. So we have to bring to the knowledge of the members even though it is one group. Why on earth this CEO is taking 1 rupee salary? Some CEOs will take, no? Is there any other thing attached? We have to disclose. Let the people know. No. Let them be aware and be careful with the related parties there. Followed? So this is your first answer. Then tangible assets, you have to say that you can apply class by class basis, but you have to follow consistently. So accounting policy of plant and building is correct because both are under different classes. When the revaluation model applies, the surplus you need to take to OCI unless in the previous revaluation it was charged to P&L account. That's why the treatment what you are doing, no, one time P&L, one time OCI, that's correct. Assuming last time it was into P&L when the downward devaluation happened. Accordingly, and one more thing, if you have got a finite useful life, property is only depreciable element in the building element, since land normally doesn't have any indefinite life. It has got indefinite life. When you said property, building, it must have had land element also. So land element you didn't depreciate, and estimated useful life of the building is much longer than the plant. So these two reasons explain why we are charging low depreciation for the building property together. Property includes land and building together versus your machinery. Yeah, very good. You have answered perfectly everything. You have identified also correctly. And that was the objective of learning, correct? Now they start at the beginning. What is the learning objective? You should be in a position to identify. When such type of instances come, when you are not seen this question previously. Properties are investment property, only cost model is followed, fair value is not permitted. Intangible assets, yes, it should have been identifiable, control and cost should have been fulfilled. But you specifically prohibit research cost. That should go to P&L. And once the technical feasibility is developed, then you can capitalize as an intangible asset. So in the given case from 1st April to September, what you have capitalized was a research. That treatment was correct. And from then you started to capitalize, that treatment is also correct. So if you see that financial controller is really a well knowledgeable, experienced person who never made mistakes here. It is only one layman who doesn't understand and getting confused with accounting treatment is asking. Followed, no? Because all the questions were one where there was a mistake. Followed? Yeah. So with this we are completed all the theoretical part. This is also theoretical, but correction of the balance sheets. Okay, there are some 3 more questions, okay, which I'll give you as a part 2. Study this first, then practice that. That is already come for the examination. In the new syllabus, it is not there. In MTP, RTP, it was there. But since we do this, we get a better understanding.